Welcome and good afternoon, and welcome back to Markets Today. We are discussing the pronouncements by the CBK governor alongside the Kenya Bankers Association chairman. Earlier today, they did put out a bulletin signaling the measures they will be taking to be able to help you as a consumer, as well as the business community, be able to avert the losses affiliated with coronavirus. Two key things came out. If you are handling cash and wanting to bank it, it might take you a week for it to reflect in your account because it will be put in quarantine from a week beginning today and you cannot be able to access it. He also indicated that the banks will waive the charges affiliated with mobile transactions, that is from the bank to your account and vice versa, meaning that he is really pushing the entire economy to go cashless and you will be penalized if you don't go cashless. He did also say that there will be a personal debt relief, but really the onus is on you as a consumer to prove to the bank that you have been affected directly or indirectly by the coronavirus. Question we are asking and discussing today: are all these measures, do they mean anything? Do they prove anything? Do they change anything, or is it just good to know? We'll also be discussing the asset management industry, which invests your pension funds into different asset classes. Where has it come from? But more importantly, where does it go to after this pandemic that we are going through? In studio, we have Mr. Maurice Oduor, who is the head of asset management at Genghis Capital. Welcome to the show, Maurice.
Thank you.
I know we had decided what we would be discussing a while back, but it looks like coronavirus is also just putting a turmoil on the business discussions as well. So perhaps we can start with a conversation in as far as the central bank governor's pronouncements on economic measures is concerned. What was your read-through from these measures?
If I see it reinforces the position of the banking system in an economy, and also just measures the policymakers are putting in place at least to sustain the economy given the environment that we're operating in. But one of the things that I pick up is now analysts will be forced now to readjust the expectation in terms of banks' valuations.
Yes.
Because given the IFRS 9 reporting framework and the strict credit underwriting standards, it means now levels of NPL will have to go up a bit. And now when you go up, it will also affect now the valuation and also expectation of going forward.
Yes.
And how asset managers are going also to decide on how to allocate different assets into different asset classes.
Okay. And I mean, I like that you've talked about the income statement structure. And there are two things that I think will be affected. So there is the NPL cost and the credit impairment. So is this a cost that you think is going to go up based on what we had earlier today?
I think based on the pronouncement by the governor, and also if you take that and put it together with the IFRS 9 reporting standards, because IFRS 9 recognizes non-performing loans based on the expected even in an economy. And given the environment that we're operating in, this coronavirus that has even shaken the global foundation, automatically IFRS 9 comes in and the levels of NPLs and impairment will have to go up.
Okay, and then there's the other line of non-funded income, which is the income that the banks have been deriving from mobile transactions. This has been a cash cow.
If you look at, in fact, the measure of a bank performance is basically usually derived by looking at how diverse the sources of income are. Funded versus non-funded. Funded being now the interest income from loans. Non-funded being now the transaction charges, the fees, especially now from the mobile money transaction between banks and the mobile money providers. What we look at now, what has been taken away is essentially the charges on the mobile money transaction between your mobile money wallet and your bank account has been waived. And also most of the transaction fees moving money from bank Pesa link has been removed. Which now if you look at again, another element that's coming under pressure is the non-funded income revenue item. Now if you look at, we break the income statement into two: income, expenses. Expenses, NPLs are already there.
Expenses are going up. Income
are going up,
is coming
downward pressure.
Profit
will have to reduce. When profit reduces, it means the expectation in terms of valuation of different banking stocks will have to go down.
And I like that because what we've been saying is on the NSC, it's been largely sentiment driven. So the downward price performance has largely been sentiment driven, but now the fundamentals are beginning to look like they will be affected as well.
Because if you look at where we are market trading at a price to earnings ratio of about 9 times, dividend yield of about 7, and if you look at all those people, there's still nothing that you could point to in terms of performance of these institutions save for the effect on the economy as a result of this pandemic situation that we are in. But now with the reality now that NPLs will be affected, income will be affected, it means can even go lower than that. In fact, we are almost approaching one of the historical lows in terms of stock market performance.
In stock markets. We're already at a historical low on oil price, last seen at 2003 at these levels. Also historical lows for global stocks, US stocks, Singapore stocks, Hong Kong stocks, Asian stocks. So then are you a buyer or a seller? Is this a point of opportunity, or is it better to be cautious and get out?
If I look at it, divide it into two buckets, in the short term, I would be very risk averse in terms of how I allocate assets.
Okay.
But if you look at in the long term, when all these things are said, when we come out of this, I think one of the key winners will be investment community, because they'll come up with a very attractive saving platform in terms of the valuation they are going to pick from the market.
Okay.
If you look at NEC, we are saying is already at a historical low. Oil is already at a historical low. We are looking at global markets already down. So if you look at now, even if you adjust valuation, I think there's still opportunity that investors will have to get from the market as it is now.
All right. Yeah. And then maybe my final question on the CBK's the governor's pronouncements. He did indicate that there could be an incidence of NPLs, there could be an incidence of needing to tap into the personal debt relief. What was your feeling? Because when I read the body language, it felt like either one of two things. Either the economy has been doing badly and now it's okay to be able to put all your cards on the table and blame coronavirus, or we are underestimating the economic impact of coronavirus, and it could really be as worse than what we have seen in the last 2 to 3 years in terms of its effect on economic output.
If you look at where we are, even if you look at the pre-corona times, still economy was not doing that good. The economic performance, money was not flowing. People, most small and medium enterprises, there's no liquidity, so we're already in bad shape. But I think now the immediate cost that you are now seeing is the corona that has now brought everything now to the limelight.
Okay.
Now we're even seeing all these measures being taken by the central bank governor and also the chair of the Kenya Bank Association, all coming to town. But if I look at it in totality, we're already in bad shape.
Now it's getting.
Corona is now just the immediate cost. The reason why now we are doing all these things that we are doing.
Okay, so we're just trying. So like already, so if I was looking at the materiality of coronavirus, if I'm looking at different asset classes, should I be extremely scared because I really don't know what I'm dealing with?
In the short term, I think yes.
Okay.
But in the long term, if you look at it, when all these things are said and done, they are going to be very attractive opportunities for long-term investors. All
right, interesting. It reminds me of a tale one of my bosses used to say, when the tide is out, that's when you know the people who have their pants on, swimming with trunks or without trunks. Okay, so asset management. I know we wanted to discuss where it has been, but I want you to just help us understand. Where are we today? And should you factor in coronavirus in your asset allocation? Because really that's what you do.
I think you should, because coronavirus will going to affect the economic performance, GDP growth rates and all those. Coronavirus is going to affect how companies are going to perform. Okay. And it's in these companies that also you look for investment opportunities. For example, we've discussed banking stock. It means in my model portfolio, the allocation to banks, I have to look at it and put everything into perspective so that at the end of the day, I make good decisions in terms of the ultimate beneficiary of the fund that I'm managing. So it's not something that we can wish away. Yes. It's already with us. Okay. It will affect economic performance. It will affect the performance of the listed companies. It will even affect the performance of the issuers of debt instruments, where they're just basically areas where we allocate assets. It will affect asset allocation in terms of how much, what percentage am I willing to put into offshore investments. Yes. We've already seen the global economic performance the way it is. US is already at one of the historical low in terms of performance. We saw S&P losing almost 10%. Okay. You look at oil performance already below, Brent crude is already below that, which means even the most expensive producer will have to readjust in terms of how they are doing business.
And also our currency has touched a low of 104 earlier today.
And if you, especially the most interesting bit, if you look at now the Kenya shilling, one of our key foreign exchange earners have been largely affected. If you look at in terms of tourism, look at in terms of foreign diaspora remittance has been affected. Okay. So all those again will reflect in the currency, which will inform even how we allocate investments.
You're making me fearful. You're making me extremely fearful. I feel like I just need to fold up and, okay, which you can't really fold up and go. So then what next? What do we do?
But if you look at even in the midst of all this, when things now begin to fall into place,
yes,
they are going to be very attractive opportunities.
Okay.
In fact, people who are making investment calls, looking at environment, see how to allocate assets with a long-term view, will be the winners in this environment.
And the people selling sanitizer, if only they could list. Because I mean, interesting, we don't have pharmaceutical companies that are listed on the NSC.
No, we don't have, in NSC, we don't have any healthcare.
We don't have healthcare.
Companies
Perhaps
that are listed.
That's where Ibuka needs to target.
As you are saying, even in all this, there are going to be other opportunities. Different models of business are going to emerge.
Okay.
Because you look at people now talking of working from home. Are we ready for it?
No.
Now, does this mean that we have to be more automated in terms of how we do, how we run operations? Can we now look at in terms of, we've already seen now banks. We used to say that now banks, people will continue needing banks even in 100 years to now, but not how they operate.
Not how they operate.
But now we see now the emergence
of people will
money.
need money, not necessarily banks. People, the need for, but you know, that stands to be debatable because Maurice, before today, really we could still continue managing cash. But what the governor has said today is, if you give me money and you pay me money, which I have to go deposit into my bank account to transact, I'll have to wait for a week for it to be reflected on my account. I will not accept your money. What the president said last week on Sunday, the president said, we are discouraging the use of money. But the governor has said, we will not reflect your money in your account for a week. The truth of the matter is, Maurice, if you give me money today, I will not accept it. So then are we going to be operating with physical money in even 10 years from today?
Because if you look at it, at the end of this, different ways of doing business are going to emerge.
Yes.
If you're giving money, I'll have to discount it.
Yes.
Because it will take 7 days for me now to have the money that I can use for transaction.
Exactly.
So I'll have to discount it for the 7 days. If you're supposed to give me 10,000, you can even agree, give me 9,300, so 700 will cut at 4. The day is lost in terms of that. But where the Kenyan economy is, we are headed towards cashless transaction, more mobile transaction, card transaction, and all those.
Should we be just stocking up on Safaricom at this rate?
Safaricom, because if you look at even the performance of the market, the current Safaricom is the one that is holding up the market.
Yes.
Because with the almost 40–50% of the market cap, and if in Safaricom is up even, let's say 1%, already market has weighted, market will have 0.5 from Safaricom. I think Safaricom is one of the stock that as a portfolio manager, I will not miss in my model portfolio.
You cannot miss at this point.
Even before doing analysis, I will not miss Safaricom.
Does this pronouncement today from the governor in a way change the fundamentals? I know it's still information that we're all processing and trying to see what it means for our financial models. But does it, for me, it really excites me. It shows me that there's been a shift. It's a very subtle shift, but it has a material impact, because I feel like what the governor has done is he has given power to Safaricom, saying we're going cashless. Yes, we're going cashless, but who's the dominant player in that space? Who has the railroads to facilitate cashless or digital banking in this economy?
I think I agree with you in what you are saying, but how I look at Safaricom,
yes,
that's this one where I usually also try to run away from this discussion of separating Safaricom.
Yes.
Because it means when you go that, mean we are punishing innovation.
Exactly.
But you know, Safaricom saw it coming.
Yes.
They layered, they put the foundation.
Yes.
And now Corona
has happened, and it's just like handed. They're like, okay, here you go.
Exactly.
Here you
it's
go.
like, remember 2008 global financial crisis, 2011 Eurozone crisis. The leading fund managers were the emerging market investors.
Yes.
They saw the opportunity,
and then
global financial crisis, market did the marketing for them. It's the same thing for Safaricom. They did the innovation, coronavirus marketed it for them.
Jeez, Maurice, I feel like you're telling me to go back to my broker and say, sell the banks, then after 3 days, put the proceeds into Safaricom. But that aside, so today you are an asset manager. You have been in the industry for a long time. Is what we're facing today, is it something that has ever happened before, or is this a new space that we're into, getting us into a new transitionary phase?
I think it has happened in the past, because if I look at how market was in 2008, the global financial crisis, NSE was down almost 35%.
Okay.
Then if I look at again immediately after that, 3 years after that was 2011, the Eurozone crisis. Remember, when even shilling was performing, when you got dollars, you could get better return compared even to the stock market.
Yes.
Shilling was almost at 126 per dollar.
Wow.
So it is happening, but I think now this one that is happening now with another element, because now these are now health issues. And if you look at what has happened in the past, we are mainly skewed towards specific elements, except the 2008 that affect the emerging markets. But now, Corona has fundamentally shaken the global foundation.
Fantastic. We'll take a short break. Then when we come back, you can now help us understand what products you're giving to the economy just to be able to enhance our investment well-being. Okay, we take a short break and we will be back after the bell ringing.